Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning, lots of cues to digest. Global cues looking bleak rather. GIFT Nifty hinting at a very subdued start. But there is good news in the form of JPMorgan saying that it will include Indian bonds in its emerging market index. So that's one positive coming in this morning. Big news. We will try and touch base with our experts and figure out what this means for asset classes, including equities. But, lots of stocks in focus over the next half hour. We'll be discussing stocks like Glenmark, ICICI Lombard, Vedanta and the likes. And of course, we'll also be addressing all your all your queries out there. So send them in to us on our YouTube feed and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Wall Street is on track for its worst week since March after a 3-day losing streak as the market continues to react to hawkish Fed commentary. US 10-year yield surges to its highest level since 2007. Meanwhile, Europe in fact ended lower yesterday given the fact that Bank of England has held interest rates after 14 straight rate hikes. Asian markets too opened with a gap down ahead of the Bank of Japan's policy decision. The GIFT Nifty, as I mentioned, is implying another weak session for the Indian markets. JPMorgan will add Indian government bonds to its emerging market index starting June 2024. India will have a maximum weight of 10% on the index once included. According to HSBC Holdings, the inclusion may also prompt inflows of as much as $30 billion. Glenmark will divest 75% stake in Glenmark Life to Nirma for over 5,600 crore rupees at 615 rupees per share. Now, the deal has been struck at an enterprise value of around 7,500 crore rupees, and Nirma will make a mandatory open offer to all public shareholders as per SEBI regulations. And among other stocks in news, ICICI Lombard's MD and CEO Bhargav Dasgupta resigns 7 months ahead of the end of his term, while Wipro's Chief Financial Officer Jatin Dalal steps down to pursue other career opportunities. Well, without any delay, let me get on board our first guest for today. Joining me is Pramod Gubbi, who is the co-founder of Marcellus Investment Managers. Good morning, Pramod. Great to have you on the show. Before I move on and talk about the markets, I want to get in your thoughts on the big development, that has taken place this morning. JPMorgan has said that they will be including Indian bonds in the emerging market index. Right now, this opens the floodgates of for billions of dollars worth of investments in the Indian bond markets. But I want to understand what implications this move will have on other asset classes and if there's any implication on equities particularly.
Thank you. Good morning. It's a pleasure to be here. Thanks for having me. Yes, indeed, it is, yet another news flow in the series of positive news flow for the Indian markets and in the Indian economy that we've seen over the last year or so. There is a structural decline in cost of capital in India for various reasons, starting with our own domestic financialization of savings. People putting more money in financial assets has meant that despite the sort of increase in interest rates that we've seen globally, rate increases in India have been fairly limited, which means that cost of capital for both corporates, businesses, as well as individuals has remained relatively low. The gap between Indian cost of capital and global cost of capital is perhaps at its all-time low. So this news actually adds to that, which means that there will be more flows towards Indian bonds. There will be more demand for Indian bonds for those investors tracking the index, the JPMorgan index, which in turn makes yields on those bonds lower. That means the cost of borrowing for Indian businesses will become that much lower. So therefore, you're absolutely right. It's not just the bond market. It has positive implications for the economy as a whole through the lower cost of capital. And in turn, other asset classes, including equities, are going to be benefiting because the value gets shifted from debt holders to equity holders as businesses pay lower and lower interest on their borrowing. So yet another in a series of positive news flow for India, particularly at a time that the rest of the world, particularly the rest of the emerging markets, particularly China, is struggling. There is more and more attention towards India from foreign investors.
Right, Pramod, you mentioned, of course, that this is another positive news when it comes to the Indian economy, as so to say. But, when you look at the markets, the mood has turned from positive to negative over the last few sessions. We've seen the markets come off, to somewhere around 2% or thereabouts from its all-time highs. But would you still say that it's a buy on dip market? And would you expect further consolidation as we step into the second quarter earnings season?
Well, I can't really predict movements in the short run, but I think further consolidation is healthy because from what we can see, there is clearly a lot of demand for Indian assets, particularly Indian equities. But we've had a fairly sharp run up this year, particularly this fiscal year. And often that tends to put off fresh money from coming in until valuations subside or at least earnings pick up. So I reckon a correction or a consolidation would be more healthy in terms of bringing in more money from foreign investors into India, and also reduce the risk of any sort of unforeseen event creating a much sharper correction. So whilst no market actually goes up in a straight line, I think it is but natural to expect some sort of short-term correction and consolidation. And like I said, it is actually healthy for the markets from a long-term perspective.
All right, looking at a healthy correction now. But, Pramod, how will you play the financial space at the current juncture? Because we've seen private banks coming under a fair bit of pressure. Would you prefer NBFCs at the current juncture? And, I also want to get your thoughts on HDFC Bank, in the wake of the merger overhang. We've seen some bit of selling pressure coming in. Since it is one of the bets at Marcellus, has your view changed on HDFC Bank, or how would you play it going forward?
Not really. I think financials has been a strong theme for us. We have a financials focused strategy as well. And HDFC Bank has been our largest holding across most of our strategies. And we continue to believe in the story. I reckon from a structural perspective, financials are a good place to invest in. There is, all the right signs in terms of economic growth from a relatively medium to long-term perspective, which should support demand for credit. At the same time, we are seeing financialization of savings, which means that there will be further growth in deposits into the banking system. And net, this has to be positive for the banking sector as a whole. The private sector banks, of course, had a great run over the last 10-15 years when most of the public sector banks were struggling given asset quality concerns. The asset quality concerns in turn sort of depleted their capital adequacy ratios, and hence it was sort of a free run for private sector banks in terms of market share gains. That perhaps has abated a little bit. I'm not sure whether the changes in the public sector banks are structural or not, but like I said, the macro environment in terms of credit demand and financialization of savings more than makes up for the opportunity to market share gains. In the long run, I reckon, given the efficiency of private sector banks, we would still continue to expect private sector banks to gain over public sector banks. And within that, our preference has been HDFC Bank because of its long history of prudent lending, low NPAs. None of that has changed given this merger, if at all. The merger provides seriously strong long-term opportunities, both on the liability side as well as the asset side. Most of HDFC Limited's borrowers have not had an HDFC Bank savings account. So that's an opportunity to build on the liability side. On the asset side, of course, there is massive cross-selling opportunities. Remember, HDFC Bank was perhaps one of the perhaps the only large private sector bank without a mortgage book. And mortgages are a really good asset class for a bank, given the long-term duration nature of it. To that extent, HDFC Bank is equipped with one of the products or the best-selling product for the banking system for the first time. To that extent, I think the long-term story remains intact. There are shorter-term concerns and headwinds on the margin front, which is well understood, really, because HDFC Limited's liabilities need to be replaced by HDFC Bank's deposits. Right now, the replacement is coming through high-cost fixed deposits, which would obviously put margin pressure. But over time, given the franchise that they've built in current account and savings account, or as they call it, CASA, HDFC Bank should be able to replace those high-cost fixed deposits with low-cost CASA and recover the margins lost in the shorter run. Net from Marcellus side, we continue to remain extremely positive on HDFC Bank, particularly given that valuations perhaps are looking at like an all-time low, not just in terms of absolute terms, but also relative to the rest of the banking sector. We haven't seen HDFC Bank trade at these sort of attractive valuations. So it remains our largest exposure in the banking space.
All right, from the consumption space, Pramod, you guys have just added Trent to your portfolio recently. Can you explain the rationale behind your positive view on the stock?
Well, I mean, we have been impressed by their execution on the West Side story, if you can call it. But there were concerns on Star Bazaar, which was loss-making for a long time. And our concerns was from a capital allocation perspective, whilst you have a good franchise in the form of West Side, if you take the cash flows from there and deploy in a format which is not working, we were not particularly convinced. But I think of late, two things have changed. One is it's not just West Side as the growth driver for Trent anymore. They have successfully demonstrated their value retail format in the form of Zudio, both in terms of unit economics as well as the growth opportunity. At the same time, they managed to sort out the format issues around Star Bazaar, which is turning profitable at the margin, and to that extent, it's the need to deploy further capital into Star Bazaar is that much less. So you now are looking at a business with not just one, potentially three growth engines, which could, again, augur well, given the high returns on capital on each of these formats. There will be plenty of reinvestment opportunity. The fact that they have demonstrated their success beyond just one format means that there will be future growth drivers for that business. So it fits right in the middle of our investment philosophy, where we are looking for longevity of businesses, because we believe that markets tend to underprice truly great businesses with long-term cash flows, and we see that happening with Trent.
Right, that's about Trent. But lastly, Pramod, what would feature on your shopping list if the markets do present an opportunity to buy into some of the sectors or stocks for that matter? Anything that's high on your shopping list now?
Well, there's plenty. Of course, we continue to work on new ideas, particularly in the small and mid-cap space. I think the rally this year has meant that a lot of our shopping list ideas have gone out of our valuation range. But we are waiting for that opportunity. Like I said, a consolidation or a correction is healthy. I reckon that is even more required in the small and mid-cap space. The rally has been just a bit too irrational in my view. So therefore, there will be a correction which is imminent. The timing is uncertain. Nobody knows when that happens, but we are prepared with our shopping list. Whenever that happens, we will be buyers in select few ideas that we've been working on.
All right, Pramod Gubbi, appreciate your taking out time and joining in this morning. It was a pleasure chatting with you. Look forward to having another conversation with you sometime soon.
My pleasure. As a disclaimer, the stocks that we've mentioned, HDFC Bank and Trent, are stocks that I own, my colleagues own, our clients own, our families own. But yeah, pleasure to be here. Thanks for having me.
Thank you. I wish you a great weekend.
You too.
Thank you. Let me also bring on board our technical expert for today. Then joining me is Raja Venkatraman of Neotrader. Good morning, Raja. Great to have you on the show. Since we spoke last Friday, we were at 20,200 and today we've even broken below that 19,750 mark. So what is the next level you'll be watching out for now? 19,600, key support level emerging now?
Yeah, good morning, Nandita. Yes, last Friday we were grinning and we were quite happy at the scenario. But then what's happened right now is something which is totally unexpected. But then if you have been trading the markets and tracking the markets, you know that nothing good lasts for a long time. So in the same way, nothing bad also lasts for a long time. So the kind of decline which we have seen over the last few sessions are clearly highlighting the fact that we are reaching into an oversold levels. That's point number one. Point number two is we are trading into the last day of this week. So there is a good there could be a good attempt at a short covering action probably. And what I'm seeing on the charts is that there is some bit of divergence which is appearing, and that could probably propel the Nifty higher. So today I'm expecting a rebound in Nifty. And as if you track even the GIF Nifty as well, that also has rebounded from the day's low. So overall, it seems to be a rebounding day, but that does not immediately give the impact or give the effect that yes, it's a buying opportunity. It's not a buying opportunity, it's a trading opportunity. So what we got to see is how well this move is going to sustain. Now, for this move to sustain, what I would like to see is the Nifty closing above at least 19,850, because that's where an important resistance zone is emerging. So those who are looking to trade the indices, I would wager more bet on Nifty, because that looks to be in a much better state of recovery than Bank Nifty. So the targets for Nifty for the day would be in the region of around 19,800 to 850. You can have two sets of targets, while Bank Nifty continues to struggle and will take some time to recover. So I would not enter into any banking stock on the long side, nor I would enter into any NBFCs. So I would wait my while in the banking space, but then definitely Nifty is showing some recovery. So this is for the index traders. Apart from that, stock specific action will continue to play, and one should not remove their attention from stock specific action, because that is independent of what has happened so far. So overall, the prospects are bullish, and 19,600 is the max I feel at the moment Nifty could go to. But then let's see what happens, because next week, as per my cycle measurements, I feel that Nifty could once again give a upward rally. So everyone should continue to maintain a bullish poise.
All right, Raja expecting some bit of recovery to kick in. In fact, 19,800 is something on the upside that he's watching out for. But Raja, let's talk about the stock of the day today. Glenmark Pharma will be selling somewhere around 75% stake in its life sciences arm to Nirma for somewhere around 5,600 crore rupees or thereabouts. Divestment will be taking place at 615 rupees per share, and the enterprise value for the deal would be somewhere around 7,500 crore rupees. Looking at the stock, how would you play it now? Would you suggest buying into this counter, because it was down somewhere around 3% yesterday, and over the last 5 days also it has been under pressure. So on the charts, would you see more downside pressure on Glenmark Pharma now?
Yeah, considering the news flow and the kind of market action which it witnessed after a positive start yesterday, clearly indicates that yes, there could be some sell-off emerging today as well. So I would like to stay away from Glenmark Pharma, and I would like to look at supports a little bit deeper in the region of around 780 to 790 to buy into. Overall, structurally, the stock is good. So one should buy it on dips rather than at the current levels.
All right, buy Glenmark on dips. But let's also talk about the hot brokerage call of the day before I take up some viewer queries this morning. Bullish reports coming in on Maruti, Raja. Stock is already holding up above that 10,000 mark now. Citi has a buy rating, target price above 13,600 rupees per share. And for Morgan Stanley also, it has an overweight rating, target price at 11,900 per share or thereabouts. Of course, positive commentary coming in from the Maruti management also yesterday. The management was on CNBC TV18, and they expect a very strong festive season, going forward. And even Citi has said that, the recent launches have insulated the company from weakness of demand in entry-level vehicles. So things like, things going well for some of these auto names like Maruti and M&M. But on the charts, how soon do you expect levels of 11,000 on Maruti? Would you say that by end of October, post the festive season, we could test levels of 11,000 on Maruti?
Yeah, so first of all, Maruti, the price action has clearly indicated that yes, there is some bit of profit booking emerging. And for the kind of festivities and those news flows to set in, it is definitely a little bit, it's a while away. So over the next week, I think that there could be some downward pressure in Maruti, and those are the levels which one should buy into. So look for a region of around 10,000 levels to buy into, because I feel that around 10,000 to 9,900 is where Maruti is heading at the moment. So I would not be a buyer at the current juncture. So look for pullbacks. Yes, the festive seasons are there, and soon we will have the auto numbers as well. So
Yeah.
all that can be considered, and then we should consider get going long in Maruti, but not at the current juncture.
All right, avoid buying into Maruti at the current juncture. Wait for pullbacks. But let's take up some viewer queries that are trickling in on our feed this morning. Lots of queries on the banking pack. Raja, nothing surprising really, because we saw PSU banks come under a fair bit of pressure yesterday. Private banks have already been under, a spot of bother in the last few sessions. ICICI Bank was among the top losers yesterday. Karthik Reddy wants to know your thoughts on ICICI Bank as to where it's headed in the short term. And from the PSU banking pack, Canara Bank is another one that we have a query on. Naveen wants to know your thoughts on this one. So how would you, what would you advise them to do with these stocks?
Yeah. Okay. So let's take up first ICICI Bank. And when you take a look at ICICI Bank, the overall trajectory seems to be on the bullish side, unlike its counterpart HDFC Bank. So now, when you take a look at the kind of activity which was happening in HDFC Bank, with a lot of FI flows were emerging, and also the big fund houses were investing. Now, what could happen is that there could be a shift probably towards ICICI Bank, considering the kind of activity which is being seen and the kind of trajectory which ICICI Bank is showing. So ICICI Bank could be replacing as a bigger bet. That's what I feel. And the dips towards the current levels. So current levels where it has come into, say, in the region of around 950 is a good level to buy into, because if you also look at the short-term risk, your short-term risk could be in the region of around 925, and you can look at it as a investment play for the next 2 to 3 months, where you can target a new high in ICICI Bank. So if you want to invest into ICICI Bank, this could be a good moment for us.
All right. I hope that
now
answers
moving on to the other bank, which you mentioned, which is Canara Bank. So amongst all the PSU banks, Canara Bank is my favorite, because it is a quite aggressive mover. And any positive vibes which emerge in the PSU banking space, this stock definitely takes to it first. So overall, it is a steady higher lows that are getting formed. Positive winds are also flowing. So any dip in Canara Bank can be used. Buy it at current levels. Use dips towards around 350 to 345 as a additional buying opportunity. Your risk could be below 345.
All right, that's the view on Canara Bank and ICICI Bank. But let me also take up a query on Kaplan Point. Rohit wants to know your thoughts on this stock. The stock hasn't done much over the last 1 month, Raja. But in the last 6 months, it has had a fairly good run, 60 to 70% kind of an up move. Rohit wants to know if it's a good time to exit, or should he hold on to it?
Yeah, Kaplan Bond definitely is showing some signs of profit booking, but then overall it continues to remain on the positive side. And yes, the pharma as a space is showing some positivity. So one should not exit at the current juncture. If one has additional capital, he could also look at adding in the region of around 950 to 940 and hold on. The level for exit would be below 930.
That's the view then. But, one last query then. This one is coming in from Muhammad Imraj, wants to know whether or not Vakrangi is a good buy at the current levels. Would you advise anyone to buy into it right now, or would you say wait it out?
Yeah, Vakrangi has not shown any signs of either a recovery or a deterioration. And the stock has spent more than almost 6 months in a consolidation phase. So I would not advise you to enter the stock at the current juncture. No visible signs of movement is also seen. So it's an avoid from my side.
All right. Avoid, buying into it. Hope that answers your query. But since we are at it, one last query then. This one is coming in from Mahendra and wants to know your thoughts on Coforge. Midcap IT, I think last 5 days, this stock has come under pressure, 3% down or thereabouts. But very quickly, what should one do with midcap IT names like Coforge now?
Yeah, so Coforge has come into a good support region. So I would be tracking the levels of 5250. If 5250 is given away, then there could be further drop here. So I would hold on and see what happens today and within the next 2 to 3 days for it to see some recovery, and then all is well in the stock. Yes, the stock is positive, but at the current moment, it is under the pressure due to the US Fed policy, which has impacted the IT stocks across the board.
All right, that's the view on Coforge and IT stocks in general. Thanks a lot for that, Raja. But before I let you go, any recommendations for viewers this morning?
Yeah, I have got a long and a short considering the current nature of the market. So I would like to go with a long in Bsoft. I found that based on my cycle studies, it has come into a good set of supports. So I would look to buy it at current levels with a stop at 485 for a target towards 505 and 510. You could also use it as an intraday play or as a multi-day play. Now, I would like to sell Bharat Forge at around 1100 with a stop at 1115 for a target towards 1080.
All right, those were the stock recommendations coming in from Raja this morning. With that, Raja, thanks a lot for joining in and sharing your thoughts with us. Let's hope that we see some kind of recovery after, the sell-off that we saw this week.
Yes.
But I wish you a very happy weekend and look forward to connecting again next week. Well, with that, we're completely timed out on this edition of Morning Trade. But don't forget, we have 2 new listings today at 10 a.m. Samhi Hotels is one and Zaggle is the other one. So watch out for that. And of course, stay tuned because coming up next is Opening Bell from me and the entire team. Thanks a lot for tuning in.